Payroll funding, the secret weapon for staffing company growth in 2023. Staffing companies provide a vital service by connecting qualified talent to businesses in need. However, despite high demand, many staffing companies face cash flow challenges that prevent them from reaching their full potential. The gap between paying employees and collecting payments from clients puts a huge strain on finances. Payroll funding provides a smart solution to improve cash flow and fuel growth for staffing companies in 2023. What is payroll funding and how does it work? Payroll funding, also known as invoice factoring, allows staffing companies to get immediate cash for their outstanding invoices. This provides funds to pay employees and expenses as soon as they come due, without waiting 30–90 days for client payments. Here's a simple 4-step process. Submit invoices. The staffing company submits unpaid invoices to the payroll funding company. This is typically done on a weekly or monthly basis. Receive funds. The payroll funding company advances 70–90% of the invoice value upfront, providing immediate working capital. Pay employees. The staffing company uses the funds to pay its workforce, taxes, benefits, and other operating costs on schedule. Get balance. When the client pays the invoice, the staffing company receives the balance minus the payroll funding company's fees. This process replenishes cash flow quickly so staffing companies can meet payroll without fail. Payroll funding differs from payroll financing loans in a few key ways. No debt. Payroll funding is not a loan. There's no debt to pay back, just a small fee on each invoice. Flexible. Payroll funding scales up or down with your changing invoice volume. There's no set maximum or minimum. Unsecured. Payroll funding doesn't require any business assets or personal guarantees as collateral. The benefits of payroll funding for staffing companies. Payroll funding provides many advantages over traditional financing options or waiting for client payments. Immediate cash flow to pay employees on time. Lower overhead costs with predictable financing fees. No debt or interest charges. Scalable to your needs with no maximum limit. Maintain credit since it's not a loan. Reduce collection risks by getting paid faster. This allows staffing companies to improve margins, take on more business, and invest in growth. How to choose the best payroll funding company. With so many payroll funding companies to choose from, it's important to find one that understands the unique needs of the staffing industry. Here are a few tips. Check experience. Look for an established company with at least 5 years exclusively funding staffing companies. They will understand your business model and risks. Review reputation. Search online for customer reviews and testimonials. A reputable company will have overwhelmingly positive feedback. Compare rates. Get quotes from 3–4 payroll funding companies and compare rates. Avoid companies charging double-digit rates. Examine technology. Look for fast online applications, easy invoice submission, and quick funding turnaround. Automation ensures an efficient process. Request references. Ask for 2–3 references from current clients in the staffing industry. Speaking to peers can provide valuable insights. Negotiate terms. Don't be afraid to negotiate better rates, higher advances, or improved terms if a competitor offers them. Doing your due diligence allows you to find an ideal funding partner to support your staffing business. Tips to qualify and prepare for payroll funding. If you're ready to apply for payroll funding, make sure you take these steps to qualify and get the best terms. Have 6+ months in business. Most payroll funders require an established business history and track record. Provide financial statements. This gives insights into the health and performance of your staffing company. Show consistent invoice volume. Steady monthly invoices above $25,000 reassure funders you can handle repayment. Have credit score above 600. While payroll funding isn't a loan, your credit still matters. Minimum scores vary by provider. Submit aged receivables report. Highlighting your solid collection history improves your funding eligibility. Gather client invoices and contracts. These are needed during the underwriting process to verify your receivables. With the right preparation, you can qualify for payroll funding and start seeing the cash flow benefits immediately. How staffing companies can use payroll funding to grow. Access to working capital is the #1 barrier to growth for staffing firms. Payroll funding provides fuel for growth in several ways. Increase cash flow. Healthy cash flow is vital for any business. Payroll funding improves cash flow for staffing companies by providing up to 90% of invoice value within 24–48 hours. Establishing predictable payments, avoiding delayed client payments. Reducing collection risks by getting paid faster. Lowering borrowing needs and interest costs. With payroll funding, cash is available right when you need it. Expand services. More cash on hand allows staffing companies to expand in several ways, such as taking on larger clients or contracts, adding new service offerings like payroll processing or HR, hiring more recruiting staff to increase talent pools, opening additional branches to extend your geographic reach. Poor cash flow keeps staffing companies operating in survival mode. Payroll funding lets you shift into growth mode. Attract and retain talent. With a strong, steady cash flow, staffing companies can better attract and retain top talent by processing payroll on time, every time, offering competitive wages and benefits, providing training and development budgets, creating long-term, stable positions. This allows you to build an outstanding team to fuel your growth. Key takeaways on payroll funding for staffing companies. Payroll funding provides immediate cash against invoices to cover payroll and expenses. It scales flexibly with your changing needs and has no debt. Look for funders with staffing expertise and strong reputations. Payroll funding improves cash flow, lowers costs, and reduces risks. It provides working capital to expand services, hire staff, and retain talent. In today's tight talent market, payroll funding gives staffing companies a proven way to overcome cash flow gaps and power their growth. The right payroll funding partner can be a game changer for any staffing company looking to reach the next level in 2023. Ready to learn more? Payroll funding has helped thousands of staffing companies improve their cash flow and growth. Call 888-653-0124 today or click the link in the description to learn more and share your success story. We're ready to help you access the working capital you need to take your staffing company to new heights.